Well, welcome to Trading Lounge and the Asian Report. I want to start with a couple of stocks and then move in to our market, because basically our market is being ruled by obviously the resources or the banks. The resources are in a bullish trend and the banks are in a bearish trend. And as I mentioned a little while ago, is that the resources, Rio, and we're looking at Vale here, Brazilian company, big iron ore company. We were looking at these guys having corrections here, and while these guys are having corrections, and we can expect the banks to be having corrections as well, because they have been in a bear market. They'll rally, of course, and these guys will pull back. So those guys are exchanging that scenario at the moment. But I want to start with Vale, and we can have a look at Rio. So with Vale here, it's quite simple. From the low here, we have wave 1 and 2 here, and 1 and 2 and 3 and 4 and 5 for the third wave, the fourth wave, and then we're going up for the fifth wave here. So we've got wave 1 and 2 here, the third wave here, the fourth wave here, and we're looking for the fifth wave to move higher. Now, it's possible that this wave 4 here can be over here and we get some sort of A wave, B wave, and a C wave over here. But we're not there yet with that. But a drop further here could do that. But at this stage here, we're looking at this being an impulse wave of little wave 1 and 2 here, 1 and 2 and 3 and 4. So a move up higher here for this coming into these highs here, having another correction, and making its way higher here. But a move lower through here would put us in a bit of a bearish mode, and this would be the same for Rio as well. But just this on the 4-hour chart here, we can start to see a bit of a trend here. This has got, I can see here, we've got an A wave and a B wave, 1 and 2 and 3 and 4. So we've got a little bit more to go here before this settles in here. So it doesn't appear that this trend here is actually finished to the upside. I know that it will be at resistance because it's pretty high up at the 61.8% mark, but into the next sort of group here. But that's okay. Let's just see how this pans out. Also, too, the iron ore chart here has got much the same pattern as this guy here. So for resources, if you keep an eye on iron ore here, this top here, if that's breached to the upside, then that turns into a bullish pattern at that side, because really from this high here, won't go into great detail, we're at our 38.2% retracement level, and we can have this now as wave 3, wave 4, wave 5 here, an A wave, a B wave, and 1, 2, 3, 4, 5 for the C wave here. So it's possible that we can, it's possible that we can come down in iron ore. So we just need to keep a bit of an eye on that. And Rio here, as I mentioned before with Rio, that we're trading roughly around the 80 here, and we would look, I think when we spoke we were above it, but we're looking for a fold back, we're looking for a correction here, and we're certainly getting that at the moment with this market, and this market's got a nicer sort of A wave, B wave, and a C wave here. So this could get a little bit more complicated here. So the whole leg down here is an A wave, a B wave coming back up, and a C wave coming in here before moving up, or we can just move straight up from this point here. So it's more of a longer term holding position here. But my main point was that while we were looking at these guys correcting, generally speaking, across those resources, then we would see the banks push up from that, and we have seen the banks push up from their current lows in their own. Each one is a little bit different, and we've had some nice volume come into those two. So we can see that this volume area here. So this is pretty much on the 1, 2, 3, 4. 1, 2, 3, 4. So this large one here is still on the downside here, and obviously some of that was buying volume. But this move up through here, we are seeing a lot of volume come in, but it's not increasing volume. So and would also expect to bounce off the 3028, number 8. So that's playing out, and all the other banks are doing pretty much the same. I don't really have a nice 5-wave structure down through here, so I'm thinking this is just a corrective rally here, but we'll need a few days to sort this out. There are possibilities that there's a low in place, but I just want to gather a little bit more information. I don't want to steer off our main theory that the resources were going to be correcting to the downside and banks correcting to the upside, and then they will both resume their trends. So I wanted to sort of put that point across. So we continue with that, and also too, I think it's also good for us to look at the US markets too as a bit of a driver. So we've got, even though our market's heading up and this market's, the S&P 500 has been quite soft, we've got this particular pattern here. We've got the A wave here, the B wave here, and then 1, 2, and 3, and 4, and 5 to come back down into this space here. So we're kind of on track with this, but I also know too that with the NASDAQ and with this market here, that we've also got a possible low in place here in this triangle pattern where we have the A wave here, the B, the C, the D, and the E wave here. So I know I've talked about this before, but I also mentioned too that we're going to need a few days to sort this out here, how it plays out here. So we're still working on that, and basically it's a bit of a high and lows game. So we've got this high here, this low here, so they become, you know, long above that and short below that, and then we've got this high in place here now, so we've got this to work with, and now we've got this one. So really we've got this sort of, you know, this triangle sort of, no, it's not a triangle pattern, but, you know, diminishing highs and lows in here, which we can work with. So just to keep that in mind here, because, you know, we are seeing, you know, if this does drop away here, then we'll see our market drop as well, because there won't be much holding it up at that stage. But we are seeing, you know, the European, the Asian markets, the Nikkei here, we're looking this to push up. We still need 5 waves to be here. I mean, it's very difficult to put, you know, with the European markets, this pattern's the same as the European markets, and the Australian market, the Nikkei here, the Nifty's a bit like this as well. It's pretty hard to finish this market on this low here, because we have a 3-wave structure here. It's possible that we could have this as an A wave here, B wave here, and a C wave here finishing, and then the C wave here, but it's just too short in comparison to this one here, so it doesn't really play out. So even though the markets are bullish and we've been bearish in them, and yes, I can be wrong, and that's fine, but we really need to allow these, you know, these to play out here in 5 waves. I won't go into the 5 waves here on the intraday, because we've got a little bit more work to do with that, and the same with China as well. But China's been in more of a downtrend, and I just don't think it's finished. You know, it just, you know, as I mentioned before, this little pattern here is corrective, so we may see this may get a bit more complicated in here, but there's further downside with this here. So when we come back to the Australian market here, we're looking for you know, this from this A wave here down to this B wave here, it just hasn't finished in 5 waves, so it just doesn't make sense to call it, you know, the low of wave 4 in here. But at the same time, you know, if we from the wave B to the wave C here, we're looking for 5 waves up here, and that's what we've been doing. And it has been a bit messy within some of these structures here, and it was slow moving off here. It has picked up some speed here, which really gives it a bullish note to that. But at the same time, we have to look at our count here and look at our 5-wave structure to the upside. So that's what we'll be doing shortly. But also too, I don't want to be a total idiot, and we need to look at the possibility, you know, of it being bullish, and we would have to, you know, view that the market coming up into this space here is approaching, you know, all this supply up here. previous sellers up here. So we're going to see resistance there, and we're going to see it really at this number here, the 6,000 here. So we will see some sort of pattern unfolding across here, even though it didn't stop here. And if it doesn't stop here, what normally happens is that since it hasn't really stopped there much, so it will move higher, and the distance that moves higher above the level is normally the distance that comes back below it in the first swing. So it's kind of a bit of a rule of thumb. So the 6,000 becomes still a magnet, but it's just the pendulum swung too far this way. It'll come back lower this way, and then it'll go back up. So it'll actually end up in a bit of a triangle pattern as it works into this point here, and it'll either move down from here or it will move up from here. So it'll either do, this is the classic pattern, which is most common, and then this is the overshoot pattern, which is less common. But either way, we'll see some dance here. So be mindful of that situation. We'll go in here and talk about this a little bit further here, because we can use the sub-levels in here, because we know that with the sub-levels of 6,000, we got 10, 20 and 30. So we know if the market gets support on top of 30 in here, then we can look at 50 at that point. Okay, but without that support at 30, then we know that the market's going to be sticking to the 6,000 at that point. So so I've had two counts coming up into this space here. I'm not sure which one is where. Okay, so this is an alternative count that we've been talking about. This box here is the 50 and the 60% retracement level. So we're past the 61.8% mark, which does give it a tick in the box for a bullish trend at that point. Yeah, this structure here, moving from the low here to 1 and 2 here, to me is quite simple. It just gets messy through here in terms of the count, and there was different ways to count this, but this was one of them here. This was the alternative count, so we come a little bit higher through here, and then we have a correction here, and then we have one more move up from that point there. So that can take us much higher from that point. On the hourly chart here, we've had a different count where we were looking for a top at 6,000 here, and I was actually looking at this top here being the top here, but I can see that this is corrective here, so I've had to re-look at this count here to see how I could count it. So I know that from this low here, I've got 1 and 2 in here, and 3 and 4 and 5 here. So I know I've got a 5-wave structure within this space here. So it leaves me with this here. So I've had to take this as 1, ABC for 2, 3, 4 and 5 here, for 1 here and 2 here. And that would leave us with 5 little waves to go up through here. This move here appears to be corrective here. This move coming down through here. The market's migrated. This pattern here is a classic trading levels pattern, but it's the first variation of that, because a classic trading level pattern will have the arrival, the reaction, the first high above the level, and then it will have an A wave, a B wave, and a C wave breaching this support line here. And it hasn't done that, so it's its first variation from this point. So this little move up here appears to be impulsive in 5 waves moving up here. So we probably will be going higher from here, unless this is some sort of 5-wave structure to here, then an A and a B and a C wave here. But still, anyway, the main point here is that this little number here, the 30 here, if you see that as support, then we'll be going higher from there. So if I can just draw that up to 30 here, there'll be some dance across here with the first high above the level and some type of little correction here. And then these guys here will give you your entry here. So the 30 is really significant, because the 30 will get us to, will get you to the 50, and then the same process applies there as well. But until we get support on top of group 1, then this market still belongs to 6,000 until that becomes the support there. It's just handy to know that, and after a while you'll get to see it. It's the same with group 2 below here. So so all of group 1 here and all of group 2 here is just the first natural swing range for a corrective pattern to occur at this level here. But this is resistance and this is a tested support, then it leaves this number here, and if it's support here, then it's to the upside, and if it's here, then it's to the downside. So anything within here is a choppy range, and you just need to be mindful of where you are and how you're going to approach and work the trade from that point. All right, I'll just leave it at that. Cheers.